It's time to awaken your inner traveler and zip around the world as money is sent to the people who rely on it. This is Money Travels, presented by Visa. I'm Indre Viscontis. Kathy Lien is a foreign currency trader with a lot of experience. She's currently managing director of FX trading and founding partner at BK Traders. And if she sounds young, don't be fooled. She's a seasoned expert who also happened to be a child prodigy, graduating from college before most of us finished high school.
I've been in the currency market for more than 20 years, since 1999. I've seen how it evolved. And when I graduated, I was recruited by JP Morgan onto their sales and trading desk. And at the time, it was so exciting because it was just when the euro was being launched. And there was a lot going on. It was a transformational time in the industry. And as a result, I got a chance to be a part of that. When you're on a foreign exchange desk and you're making markets, you're basically just responding to customer flow. So you're looking at the movements in the currencies where there's more demand or there's more inclination to sell, and you're pricing accordingly. And the customer gives you their euros, their British pounds, and you have to exit out of the position for either no losses or ideally some profits. So it was really flow-based trading. And later on, I moved on to their cross markets proprietary trading desk, where I basically looked at other markets to help me gain, an edge on what could transpire in the Forex market. So for example, we learned to kind of watch where bond yields were moving and what that would mean in terms of how the US dollar would move. And, looking at correlations between different markets. And that's in many ways still the way I trade today, but there was certainly an evolution process.
Welcome to Money Travels, presented by Visa. On this podcast, we follow the money as it zips around the world, enabling our fellow humans to survive and thrive. And we talk to the experts who are building the tools that will transform the next generation of money movement. Timing when to exchange money from one currency to another is something we've probably all experienced, whether it's in preparation for a trip abroad or our livelihood if we're trading in the markets. And with the digital revolution, it's gotten a lot easier for the average person to figure out the rates and move money fast. The European Central Bank recently pointed out just how important new payments technologies have become. The bank says that over the past 10 years, central banks have completely overhauled their back-end payments infrastructure, with the result that domestic payments are getting faster and cheaper in many countries. The challenge now is to link those systems together and make cross-border payments as fast and as seamless as the best domestic systems to meet customer expectations for fast money movement, no matter where it's being sent. So how does this infrastructure impact currency exchange? What are some of the latest tools that enable global money movement across borders? To get a better sense of all this, we're going to talk to Piers Marais, who has nearly a decade of experience in product development. He oversees product strategy for Visa Cross-Border Solutions and Currencycloud's client base. He draws on his extensive background in payments to ensure that Visa Cross-Border Solutions and Currencycloud are continually at the forefront of the latest payment innovations. Before helping move money across borders, Piers spent 7 years in global maritime tech, working alongside the likes of Maersk and Glencore. But first, we're going to hear more from Kathy Lien, whose expertise as an on-the-ground FX trader will help us see the use cases and the benefits of the tools that have been revolutionizing currency trading.
In 2002, 2003, there was a new industry emerging, which was online foreign exchange trading for the average person. They called them the retail trader. At the time, it was a very, very new industry. It was, kind of the residuals off of the .com boom. Everyone still, and the day trading days, the go-go days of day trading, everyone still had a thirst for trading. And foreign exchange was becoming a much more accessible market through these new retail platforms. So I joined that space in 2003 and helped one of the leading firms at the time, grow the market, educate individual traders, and also, teach them how much has changed over the past couple of years in terms of access. Because I remember a lot of times back at JP Morgan, the real-time charts, the real-time data feeds were all, thousands and thousands of dollars, completely inaccessible to the average person. And through these retail foreign exchange firms, they basically create a much more level playing field. So that made the market more interesting, more accessible to a lot of traders around the world.
And what about, over these last few years, as I guess a lot of one of the things that Currencycloud provides, for example, that I think is unique or relatively new is that they can get you sort of the foreign currency transactions 24/7. They don't have to wait until the bank in the, home country opens and sort of sets the rates. Can you talk a bit about how that works and how that's changed and maybe when that changed?
Well, what I would have to say is that through this evolution in the industry, we have seen, a lot of firms prop up for trading, but we also have seen firms that have offered not only real-time transactions, but much tighter, what we call spread, which means that, you're no longer paying up at, the local exchange shop or at your local bank. You're getting access to much better exchange rates, which has made foreign exchange a much more accessible instrument. In the past, there was a lot of interest in other countries for what we call carry trades. And what that is it's very simple, where, for example, if you live in a country like Japan with a very low interest rate and you want to be able to move your money to another part of the world for a higher interest rate, it was very difficult. And, you had to pay up and you had to make sure that you would cover whatever transaction costs as well as foreign exchange conversion rate. But I think that, with Currencycloud and a lot of evolution and changes in the industry, you're able to do the same, but at a much more attractive rate, along with a faster speed, which, is very advantageous because, currencies do trade 24 hours a day. And sometimes there are some, big developments. And for example, you may be traveling or you may only be available at a certain time of day. So I think, the combination of access to the foreign exchange market on a digital level and also the competition in the space has given consumers, as well as traders from a different perspective, greater and better access to foreign exchange rates and instruments.
So I can imagine that, a bank that is essentially a service industry benefits when they can provide a service that is not that the person themselves can't do. Have you seen an evolution in terms of as currency trading has evolved, that there's less room for people that are in the service industry, and sort of how has that evolved in terms of what is the role of these service providers when someone can do forex trading on their phone seemingly without all of these middle people?
Well, I think it relates to what you mean by service providers, because in terms of the foreign exchange space, I think that it's come to the point where the difference between one foreign exchange provider and another is not significant. However, for a company like Currencycloud that is offering 24/7 currency conversion, I think the currency conversion market is still very raw in terms of individual interest. I think most people here in the US and abroad still go to their bank to get the currency exchange, or they will pull it from the ATM. They're not engaging in these online platforms because they haven't had the same degree of exposure that traders do to the foreign exchange trading space. So I still think there's a lot of room for growth in the market. And I'm certain that very few people utilize these online exchanges for future activities the way they potentially could.
Today, with all the advent of these new tools of kind of, real-time FX rates being available 24/7, how has your life and your work gotten easier, better, or actually is it harder?
Well, I think that it's harder in the sense that, because the market is 24/7 and it's liquid throughout the course of time, anything can happen overnight while you're sleeping. And so that's why it's very important to utilize stops or to reduce your positions overnight unless you have a strong level of confidence. But I think there's a lot of positives that come out of that as well, because there's a lot of movement that can happen overnight. And what's really great for traders is that you can design your own trading day. If you have a daytime job and you can only trade at night, then you can focus on trading the Tokyo session. Or if you work during the middle of the day and you're not so busy in the morning, you could trade the New York session. You can really customize your own trading day because it's 24 hours, and if you're in the West Coast, you could potentially trade Europe. So there's a lot of more opportunity, I think, that makes the market much more interesting for everyone.
This new real-time speed of foreign currency trading is easier and more accessible for more users. But obviously, there's an invisible infrastructure that had to be built in order to make it possible. So to get a sense of that infrastructure, I spoke to Piers Marais. He's head of product at Visa Direct's Cross-Border Solutions and also CPO of the Currencycloud platform. Piers Marais, welcome to Money Travels.
Thank you. Thanks for having me on.
Can you shed some light on what's actually happening behind the scenes, under the hood, to make these kinds of cross-border transactions feel so easy for the consumer?
It is not easy under the hood. There is an awful lot of complexity. And maybe I'll put my hand up. As a product person, I really believe part of the art of product management is about the customer experience, really finding ways to improve, enhance, optimize the way in which customers are interacting with any product, solution, or piece of software. And so coming back to your question, the product managers like me, my team, and many others in the industry beyond are all trying to make some of those under the hood processes as invisible almost to the end consumer as possible. So when you log into an app or into a website and you hit pay or you hit the send button, we want that to be as frictionless, as easy as possible for the end customers. And we try to abstract away a lot of that complexity. But some of that complexity starts probably actually in the KYC, the know your customer part of this journey. And in a cross-border perspective, that complexity really starts to magnify quite quickly.
So let's talk a little bit about Visa Direct's role in simplifying these cross-border transactions. Can you give us a sense of how Visa Direct can, by connecting all these various endpoints, serve as a kind of medium by which these cross-border transactions can become more efficient?
So I like to think of Visa Direct as that single partner for banks, for fintechs, for governments, other financial institutions around the world, that really then allow them to connect their clients, their customers, to an absolutely colossal number of endpoints, over 8 billion endpoints around the world across different card, account, and wallet schemes or rails around the world. And really it is about allowing those transactions to travel through the most efficient routes. For example, a bank with customers in the US, now being able to connect those customers into mobile wallets, for example, in Kenya. That is not something that has been possible in years and decades gone by. But really allowing those banks, those end customers, to reduce some of those intermediaries, to reduce some of the cost and improve the speed of those transactions is really fundamental in the global digital economy to provide that better experience ultimately to their end customers. I think beyond Visa Direct, with the addition of the Currencycloud platform as well, this is not just about the art of sending. This is also about receiving and allowing businesses and customers to expand their addressable markets in the global digital economy, to be able to transact across borders in ways that they've not been able to. So I think, the coming months and years are really, really exciting to see how we combine even further some of these capabilities to provide even more, hopefully, compelling solutions for our clients and their end customers.
And let's drill down into, real-time foreign exchange rates and how Currencycloud manages that? Because I'm sure that's one of the major problems that is designed to solve. So how important are real-time FX rates and currency conversions in today's global economy, especially for businesses that operate in multiple countries at the same time?
So again, I come back to the idea that we have this real-time experience in pretty much everything that we do, either in our consumer or our business lives. And yet some of those experiences in the financial services space haven't kept pace with the rapid changes that we've seen the kind of the internet and mobile internet eras really bring to pretty much every avenue, every walk of life right now. In terms of real-time FX, this is an absolutely key component when we think about real-time financial services, real-time money movement that are underpinning and enabling the other real-time experiences that happen in the real or the digital worlds on top of us. So if you think about FX as one component that can be one component within a wider chain, real-time FX then has to be considered as an enabler for real-time transactions, where you fundamentally expect those transactions to land in seconds on the other side of the world, despite the sending currency having been converted into a different one. I think in terms of the real-time FX and real-time FX experience, there is also this level of transparency that starts to be embedded in lots of different solutions. With that increased transparency, you start to increase your trust with your customer base. And with that increased trust, you start to acquire, retain, grow your customer base in different ways, in new ways. And I think if we look at certain, particularly in the business space, we still see businesses having to call up their financial institution to speak to an FX desk to actually start to get a real-time FX conversion rate. That is not an experience that is something that we see anywhere else in our digital lives. And part of that real-time FX proposition is to look to start to change and to improve that. And then I think the third area beyond the enablement and the transparency side of things is the risk management and the cost efficiencies. There is, especially with volatile currencies, with currency rates that are fluctuating quite significantly on a global basis, there are risks and costs associated with those fluctuations, both for banks and non-bank providers, as well as for the businesses at the other end of the chain. And especially in the business world, those high-value transactions can lead to quite significant losses in some cases, even through small levels of fluctuations. So this really comes back to trying to solve that need for businesses to look at different ways, additional ways to protect profits, to drive down some of the costs, to decrease margins as well in the end-to-end transactions that the FX component might be just one part of, a significant part, but one part of a larger chain.
And you mentioned the need to, call someone at the bank, at the FX desk. Obviously, banks aren't open 24/7, but Currencycloud provides its services now 24/7. So how do you accomplish that?
Yeah, great question. And I think this is where we use this mixture of technology plus innovation from a partner perspective as well, using now as part of the Visa group, leveraging some of those capabilities that we have across the Visa ecosystem to really bring those things together and to life for end customers. So from an API perspective, an API should be always on, 24/7 kind of accessibility. But what happens if we think about APIs just as the piping for some data to travel between one financial institution or client and another, what happens off the back of that data traveling between institutions is really, really important. And this is where we start to look at the FX risk liquidity management sides or parts of this equation. And again, try to abstract as much of this as we possibly can for our clients and their end customers, so they get that 24/7 always on experience without having to worry about the infrastructural elements that really underpin and enable the solutions that come to market.
Can you give us a tangible example of how a business might benefit from real-time FX rates and how that might trickle down to the consumer or a marketplace seller?
So if we take the seller example to start with, in the global digital economy, we see this proliferation of sellers on various different marketplaces, e-com marketplaces around the world. And again, as a consumer consuming those products around the world, you don't think twice now about purchasing something from a seller in a different country for the most part. But this is where I think some of the real-time infrastructure really starts to come into play. A seller, for example, on a marketplace like Etsy can start to price their products in their local currency, for example, start to receive payments in those local currencies. For a consumer as well, you start to get that more of your own domestic feeling. So it is quite an odd, disjointed experience to log on to a website or an app and see something you might want to purchase in a different currency and try to understand exactly what that means in terms of your own home domestic currency. And that real-time FX set of capabilities now starts to enable that local domestic experience that starts to build trust, starts to give you confidence as a consumer and confidence as a seller that you know exactly how much something is going to cost you. You know exactly how much is going to land ultimately into your bank account as a seller. And those are all things that haven't been possible in years gone by that we really start to see in the wider digital economy today. Probably a second use case is in the remittance space, perhaps. Thinking about different ways with, for example, with Visa Direct, thinking about different ways to land money on card, account, or wallet rails. Again, that real-time FX becomes a crucial solution that sits in the middle of the ultimate transaction that a migrant worker, for example, is looking to make to send money back home to their friends, their family, their communities.
What are some industries in which the speed of FX conversions offers a competitive advantage? Can you give us an example of where this might be at play?
The explosion of the e-commerce world over the past, or sector over the past decade or so is a really, really key part of this. Let's say there's a seller in Indonesia selling on a marketplace that they didn't have access to previously, who is now able to expand to this now global customer base. In turn, that gives that global customer base this added element of choice, which I think it's fair to say that we are all leveraging and making use of on a day-to-day basis. But that real-time element really starts to come into play in the e-com space, I think, in terms of the enablement of the things like the price certainty, things like the transparency of some of those costs. You know exactly as a consumer or a seller what that's going to cost you and what is going to land.
But if you're keeping up with the latest news headlines, you might have noticed that a lot of businesses are shifting towards more of a local supply chain. And some key opinion leaders are talking about deglobalization, a trend towards more of the economic exchanges happening on a local level rather than a global level. Is this a real factor in terms of how currency exchanges are going to be growing in the next few decades? Or is this just a little bit of a blip? Do you see any evidence in your field that either counters or is in line with this narrative of deglobalization?
Well, I think of deglobalization as effectively the shift away from kind of global cooperation towards focusing, I think, as you said, on domestic or local interests. And ultimately, we then think about that as a movement away from a connected world, moving towards a less connected world. And that then starts to impact perhaps the free movement of people, of goods, of services, maybe also of data and money. But ultimately, deglobalization, I don't actually think is a new concept. It is part of a wave cycle that follows globalization, and after deglobalization follows reglobalization. If we think back perhaps to, the late 1700s, the US War of Independence arguably is an example of deglobalization, that split away from Britain, the British Empire, more recently, Brexit. But for me, deglobalization is not then the de facto end of globalization. It is perhaps on a wave cycle. It is that downwards trend from the peak to the trough of that wave cycle. And we should expect that to continue to happen in patterns and in waves going forwards. I think if we then relate that back to the cross-border market, there are some key facts that then or key numbers that start to contradict the feeling of deglobalization, that the period of deglobalization that arguably we're in. So if we look at, I think the Bank of England recently announced that, or shared some statistics that by 2027, the total global cross-border volume will reach $250 trillion, which is up by nearly 2/3 over the past decade. If we look at the remittance space, there are over 180 million migrants, according to the World Bank, who in 2022 sent $630 billion back home to friends, to family, to other communities. And then if we look at China, for the past decade, they have been consistently the world's largest exporter, but also the largest trading partner of various different nations around the world. If we look at the sum of exports and imports. And despite some of these deglobalization challenges, if we look back to 2021, there was a record high of $3.4 trillion worth of Chinese exports. So I think there are some key stats and facts and figures here that are a counterpoint to this feeling of geopolitical tension, of deglobalization that's happening around us. And I then come back to this wave of globalization and deglobalization, not sitting on a horizontal line, but actually on this sort of upwards trending line. And that over time, we will inevitably see these periods of deglobalization, but ultimately the digital age has enabled the world to become more connected. It has allowed the movement of people, goods, services, but also of data and money to become more free, not less free. And that despite some of the tensions that we are seeing in the current period, that over time, that level of cross-border volume will continue to increase.
And with climate change upon us, there's a lot of prediction that human migration, is just going to increase, and in fact, possibly even exponentially so. And that might mean that a lot of the cross-border transactions that are happening are much smaller payments. How do you see Currencycloud or Visa Direct meeting that need? And how are you preparing for this coming change?
I think, again, if we start at those consumer expectations of speed, of reduced cost, especially on at the consumer end of this, and particularly potentially in the migrant worker use case that you've just mentioned, this does come back to technology becomes an absolutely key infrastructural player within this. We have to look at ways in which we are able to scale platforms to be able to support these multiple different use cases that might expand in terms of transactional volume, but perhaps not in terms of dollar equivalent value. We have to be able to do that through technology first and foremost. This is not an area where manual operations really can continue to exist. If there are banks, fintechs, and businesses beyond that haven't started that digital transformation journey towards that highly scalable, highly automated world, then the time to start is now. I think the good news is that there are partners who are like Visa Direct, like Currencycloud, who are there to be able to assist in that journey. But I think for everybody within this ecosystem, businesses, banks, financial service providers, and beyond, that time is now really to ensure that we are system ready, that we have that ability within ourselves to scale, to process a new type of microtransaction in an ever-connected world that, again, as an industry, we've perhaps not had to do in days and years gone by.
But what about this explosion in generative AI? Now that it seems so much easier for anyone to write code just by prompting a large language model to write it for them, how is that going to change foreign currency trading?
That's kind of the age-old debate about whether, the robot should be trading or the human should be trading.
Yeah.
And I think that, the robot, as much as, there's a lot of clever AI out there, can't necessarily be able to price in every single scenario. And we've seen throughout the past decade alone a lot of black swan events that aren't supposed to happen as often as they do. And I don't believe that these algorithms can correctly assess and predict all of those developments. So I think that a human element of it is always needed, especially with such an evolving landscape and with a lot of even AI is an industry that's evolving. I think we have to understand it in order to train the robot to properly trade it.
Some of the challenges that Gen AI and AI poses across the financial services sector are pretty wide-ranging. We had lots of conversations around the anti-money laundering space, particularly deep fakes, for example, that are posing all sorts of challenges. From an FX perspective, I think we do need to come back to the on the one side, it is the rates, the availability of the rates, transparency of the rates, and the rate setting that we see on one hand. On the other side, there is also then the physical execution of those trades and the actual money movement that then happens across borders. And at this point in time, as far as I know, there aren't yet bots and Gen AI capabilities that are able to sort of forge that actual trade execution, perhaps. But I am sure that, like in many other parts of financial services, that we are going to come up against more and more sophistication in terms of how particularly fraudsters are looking to manipulate parts of the domestic and international money movement space.
Thanks for listening to this episode of Money Travels, and thank you to our guests, Kathy Lien and Piers Marais. If you've enjoyed this episode, please subscribe and follow the show, and leave us a review so that other people can find it. Until next time, I'm Indre Viscontis, and this has been Money Travels, presented by Visa.